Hey everybody, this is Kevin Salley with the Prevail Group. Today we have a special guest, Mike Cohenour with BlueLeaf Lending. Mike, thanks for joining us.
Yeah, thank you. I appreciate it.
So today, Mike and I want to bring up a question that we get often, and I get this a lot on the real estate side especially. The question is, should I wait to buy? I think in our market here in the Denver metro area, and a lot of markets around the country, we're seeing low inventory, extremely high prices for some people, and I think it's frustrating buyers. So we get that question a lot. Should I wait to buy? Or maybe I'm just going to wait to buy. So what we wanted to talk about today was the potential downfall of waiting to buy, kind of what that looks like on the mortgage side, what it does for your down payment and the cost of the loan and stuff like that.
Yeah. Well, and I'd say probably really three things, right? Your competition, mortgage rates, and down payment are kind of the three key things that would make sense to talk about today.
Absolutely. Yeah.
So from a competition standpoint, should you wait to get pre-approved and should you wait for financing? I would say the answer is no, because time is a friend. What we can do is we can look at things that are specific for you as a borrower. So specific programs and rates that would apply to you. That would be important for you to be ahead of the curve so that we can take advantage of timing. Things like improving credit, possibly reducing debt, and giving time to increase a down payment could be very advantageous as a borrower. And then from a property standpoint, as properties become available, you can act in a timely fashion, and you can also negotiate in the best possible way on your own behalf. So that'd be one key thing that I would say from a competition standpoint.
Yeah, that makes a lot of sense, Mike. As we've seen in our market specifically, over the past 10 years, we see on the average of about a 15% increase in value in somebody's home, which is crazy. We've had, in some of the years, we've had 21 to 23% increases in value. So, when we are looking at that mortgage and the cost of your loan each year you wait, or even each month, I think it changes quite a bit.
Yeah, it can really change as far as mortgage rates go. The decision to wait in a market that continues to increase has a potential effect on interest rate and then really monthly down payment. So as an example, a $500,000 mortgage today, if you were to wait and the interest rates increased, so let's even just say by 1/8 or 1/4%, that would have a $37 or $74 respective increase to your monthly payment just as a result of waiting. So 1/4 point increase in rate at $500,000 would be $74,000 per month.
Well, that's a lot.
Yeah, can have an effect.
Absolutely. And then you add on to that exactly what you said, the cost of the mortgage, but not only that, HOA and insurance and everything else. I mean, that really makes a significant difference.
Yeah, well, it can have an effect on whether or not somebody qualifies, or even just when you think about monthly budgeting for a house payment.
Yeah. So what does that do for your down payment when things are going up like that, when the market's increasing that much?
Yeah, well, as the market increases, your down payment as a factor increases directly proportional with the market. So we take the exact same scenario. If you were buying a house at $500,000 and you decided to wait, and that house then increased in price to $550,000, well, your down payment would increase accordingly. So at $500,000 with 10% down, you'd be bringing $50,000 in down payment. At $550,000, you'd bring $55,000 in down payment. So it increases proportionally as the market increases. So we have to factor that in for a borrower, how much that they have. There's also some good news that came out today, actually 2 days ago, but it's all starting to come into play today, which is the new conforming loan limit has increased up to $647,000. So a borrower can get a conforming loan now, a purchase price up to $809,000 with 20% down and still be in a conforming loan. So really kind of some great news for markets that are seeing increases in values like we're seeing in Colorado.
Absolutely. That makes a big difference, especially here in our area. The median price of closed homes was $585,000. That's detached single families. But the average closed price was $618,000 last month. Yeah. So with that new bump in the conventional loan, I think that's going to be pretty important in a lot of states.
Yeah, it's going to be great for borrowers with a conventional loan. You can have as low as a 3% down payment, 5%, 10%, 15%. All of those just improve your overall monthly payment. But it's going to be a great opportunity for first-time home buyers or lower down payment options for borrowers in higher price points.
Yeah, that's fantastic.
Yeah.
Well, Mike, thanks so much. Really appreciate all the information, and all you out there. We hope that this information really helped you make an informed decision whether or not to wait to buy. We get that often in our profession, and of course, as we always like to say, we don't have a crystal ball, so we cannot predict the future. However, looking at trends, it often does not pay to wait to buy.
Yeah, start early. It's to your benefit.
Thanks for your time, y'all. Appreciate it.
Have a great day, everybody.